Hi, I want to show you how to review the balance sheet and dig into the details a bit more. As a small business owner, you usually won't spend as much time in the balance sheet as you do in the profit and loss, but it's still important to understand it. So let's go into the first section here, current assets. You'll usually see your checking and savings accounts here. And if you've been doing your reconciliations properly each month, you can rely that these numbers are accurate. So there's not much we need to do here. Let's go down to inventory, which is another common one. And I think the best way for business owners to review this is just to click into a given month and understand the activity in there. So if you're purchasing inventory, it should be increasing the balance here. So if you say bought $500 in inventory in January, you would see a $500 balance here. And then when you make adjustments to inventory, so typically this is done at the quarter, you would book a reduction of inventory and an increase of cost of goods sold. So that's where you're saying we have removed this out of inventory and we've sold it. So then you would see a reduction in that inventory balance typically when that adjustment happens. So you just kind of want to be tracking that activity. When you're in a month reviewing, are you seeing the purchases get booked here? Because oftentimes maybe they go to the wrong account. So we want to see our inventory purchases coming in here. And then we want to see that adjustment when inventory gets moved out either to cost of goods sold or to damages. We want to see that happening. So just kind of clicking into each month and understanding if those two things are occurring in each month. Another thing we might want to review is the fixed asset section. So these are large items that you're holding longer than a year. And oftentimes there's old items sitting here. So if you know that you're not using that item anymore, you've taken it out of service, then it can be removed from the books. Another thing that we commonly see missing here is depreciation. Depreciation is something that's calculated for your fixed assets by your tax accountant. And so we want to see original cost minus depreciation to get to the book value. And if you're not seeing that, then you might just reach out to your tax accountant, see if they can book that for you. Then going down here to current liabilities, we have our credit cards. So again, if you've been reconciling each month, you can rely on these balances. And then you have other current liabilities. A common one is your taxes payable. So maybe sales tax payable or payroll tax payable. And kind of similar to the inventory balance, you want to click into each month and understand the activity. And an important thing to look for is, let's take sales tax, for example. When you're collecting sales tax, it's going into the sales tax payable account. And then when you make a payment to your state agency, it will reduce that balance. So you want to see that within a month, especially when you know you've made a payment. So if you know that you made a payment in April, you want to look in this monthly balance and make sure that payment got applied against the payable account. So that's sort of just what I'm trying to ensure with payable accounts is that, the activity is accumulating in here, whatever it is. Maybe it's taxes are accumulating in the account, and then the payment hits and that reduces down that liability. So that's basically how payable accounts work. So that's just something to keep an eye on. And sometimes you might see the balance like constantly increasing and it never gets reduced. That might be a sign that the payment's not being applied. So keep an eye on the activity there. Same with loans. With loans, you have that initial funding of the loans. You'll see a big, say you got a $10,000 loan in January. And then each month after that, you're making a payment against the loan. So we should see that loan wind down. It should be decreasing. And if the payments aren't being applied, you won't see that. So that's just something to watch out for. And then down in the equity section, I think it's important for business owners to look specifically at the distribution accounts. There's usually a lot of activity happening in there. And you want to make sure that the distributions you see are true distributions to the owner. Sometimes business expenses get mixed in here, and we want to make sure any business expenses are showing up on the profit and loss. So this should just be draws on the business or distribution. So typically owners pay or sometimes personal expenses for the owner. So just do your best to look through that, make sure there's not business expenses mingled in. Same thing with members' contribution. If there's money coming into the business, you want to make sure if it's in the contribution account, it should be capital, so an investment into the business. We don't want income mixed in here. The income should show up on the profit and loss report. So just a couple things to keep an eye on there. And then I like to double check that the net income down here matches to the profit and loss. That's feeding over from the P&L. So just take a peek that those numbers match as a double check. But just sort of spend time navigating across the months, looking in each month as you review. You can review monthly, and just make sure you understand the activity. If you don't, always ask your accountant or tax professional, and they can help. But it's important to understand the activity that's happening here.